If you own physical silver, you should be glad because things in the silver market are heating up and it's about to get nasty. Over the weekend, silver was sold out in India and apparently the silver market actually broke. Let's get into it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching. I do sincerely appreciate it. Silver price is holding steady above $50 an ounce. It's currently sitting at $52.28. If we look at silver price year to date, you can see we are up about $23. This is a massive gain this year, but just in the last month, silver is up about $8. So silver is doing very well, but not as well as gold. Gold is up about $100 today, reaching a new all-time high, and it's crossed over $43.50 for the first time ever. So many of you know gold leads the way and silver follows. Gold is certainly leading today. But what's the deal with silver being sold out in India, a supposed panic in London, and the silver market breaking? I actually want to start out with London. Many of you know that London or the LBMA has been low on free float silver, and they've actually needed to fly silver over on planes from the US rather than send it by boat because they needed to get it there that fast. In this Scottsdale Mint article, they say the London silver market is in rare disarray. A powerful short squeeze has driven benchmark prices above $50 an ounce, marking only the second time in history the metal has reached that level. According to Bloomberg, liquidity in London has nearly vanished. Traders shorting the physical market are struggling to find metal, paying steep borrowing costs to maintain positions. There is no liquidity available currently. What we are seeing in silver is entirely unprecedented. Here you can see the amount of silver in London's vaults going down, and if we look at free float, or what is tradable, back in 2019 there was about 850 million ounces. Today, less than 200 million ounces remain. As a result, the cost to borrow or lease silver has skyrocketed to levels we have not seen before, and this is putting immense pressure on the silver market. So how does this get fixed? Well, in 1980, regulators quelled the Hunt brothers squeeze by restricting new positions on U.S. exchanges. However, no such mechanism exists today. Relief must come from increased physical supply, either from ETF liquidations or shipments from abroad. Some traders are already moving silver by air, a costly but necessary step to rebalance a market where paper prices have once again collided with the limits of physical reality. So that's a little snapshot of what is going on in London right now, but what about in India? How is the silver market broken? Another Scottsdale Mint article talks about the unexpected shortage. I like how they put that in quotations because it's not really unexpected. The Hindu festival Diwali is going on right now, and if you live in India, you know this is widely celebrated, and many people will go out and buy gold and silver during this holiday. For months, Vipin Raina had prepared for a surge in silver demand during India's festival season, yet when the rush arrived, it exceeded every forecast. At the start of the week, Pamp India, the country's largest precious metals refinery, ran out of silver for the first time in history. Most people dealing silver and silver coins are literally out of stock because silver is not there, said Raina. This kind of crazy market where people are buying at these levels, I have not seen in my 27-year career. That's incredible. By week's end, shortages spread far beyond India. International investors and hedge funds joined the buying frenzy, seeking refuge from a weakening dollar or chasing the market's momentum. London, the world's benchmark hub for silver pricing, soon found itself drained of available metal. One interesting thing mentioned in this article is that JP Morgan Chase, the largest bullion supplier to India, told at least one client it could not deliver further silver until November. Wow, JP Morgan Chase, I thought you had hundreds of millions of ounces of silver ready to go out. I wonder where they could have gone. Here is an interesting interesting text thread posted on X today from Eric Young. It's Bob the Bullionaire. I love that name. Look at this. He says, my recent theory on COMEX is that they are now being used as the vault of last resort because LBMA broke on or about October 3rd. You can see it in the COMEX data, and I matched it with the timing by others, Jensen and others, that LBMA free float went code red. And the vault of last resort just lost 9.4% of its free float in 10 days. Won't be long until COMEX silver free float is also zero. Oh, and we have December deliveries looming, and my model shows 110 million ounces, which is insane, and a good amount of those ounces will be gone from free float forever. My goodness, try saying that 10 times fast. This is pretty crazy, though. LBMA is getting drained of silver, and now the COMEX is as well. Here is a video clip that CNBC posted in India. It's showing one of the long lines for a gold and silver dealer. I cannot imagine waiting in a line this long, but it's basically foreshadowing. If this is going on in India right now because of the limited supply of gold and silver and them actually running out of silver, this is something that could be happening in America at some point. Now, I know they did have their holiday going on, but just look at the demand for gold and silver. We know there's a lot of demand around the world. We know demand is certainly increasing for precious metals, with people like Morgan Stanley saying that you should now have 20% of your investment portfolio in gold. So I think a lot of people are starting to wake up to the fact that silver is going to be unobtainium at some point. So it would be prudent to invest in gold or silver now while you still have the chance. I know gold is at an all-time high and silver is near its all-time high, but still, these prices could go a lot higher. If we look at the M2 inflation adjusted all-time highs for both gold and silver, and remember, this is using the 1980 CPI metrics as put out by Shadow Stats, you could see gold previously hit that high of $11,500. That was back in 1980, adjusted for inflation. Silver went all the way up to $668 an ounce. So both precious metals are well below those highs right now. In regard to gold, Gold Silver HQ put this out earlier today on X. Gold is now 6% of global investable assets. It was 22% in 1980. Plenty of room left, and this time won't just be a replay of the 1980s, but a once-in-a-lifetime monetary reset. So we could see gold and silver actually go higher than those previous numbers, and who knows how high they really could go. I think the bottom line is that if you don't already have a position in gold or silver, you should definitely consider one. Gold is up like $1,700 year to date, and silver now being above $50 an ounce. We did have that dip on Friday, so silver went as high as $54.24, and this could be a really nice buying opportunity right now. It is starting to recover today from that dip last week, but the fact that silver is still above $50 an ounce tells me it's setting up a floor here, and I don't know where it could go. Some people are suggesting $60, possibly $70 an ounce this year. I'm definitely going to be watching with my eyes wide open, and I'm curious, where do you think silver's going? Let me know down below in the comment section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.